Hello traders, Gary Wagner here before 10 o'clock in Honolulu, 4 o'clock in New York on Tuesday, the 14th day of October, 2014, and this is the daily report for gold and silver. While we have a stock market that is attempting to recoup, it is up ever so slightly, a very strong dollar. We do have the precious metals mixed today with gold and silver trading lower, platinum and palladium trading higher on the day. First to gold, current print on the screen 1233.68. That would be the cash or spot market price. Low 31.50, high 37.50. Silver also trading lower, nominally lower, as you can see from this weekly chart. We will quickly convert that to a daily, though, make it a little bit easier to read. You can now see this down day right here, off about 8 cents on the day. In terms of the current price, we're looking at about $17.40. It has had a low of 34 and a high of 57. More on silver in a little bit. So, as I said, we do have gold and silver trading slightly nominally lower. We are attempting to have some sort of a bottom or recoup within the equities markets. Dollar is solidly higher. I first draw our attention to our weekly chart. And the reason for taking a look at this first is considering the kind of move that we saw last week in the market. Of course, it's only Tuesday, but even with today's down move, we still got a solid green candle. We had that $10 move on Monday starting the week off. When we look at the fact that we've got this concrete bottom, in other words, this really, really gorgeous triple bottom here, it does really lend us to the possibility that we are forming some sort of a base and could have, I underline, a substantial rally. Initially, I was looking for this particular move to take us anywhere, and we'll take a look at some of the intraday charts so you get a better idea, but anywhere as high as maybe 46 to 65. That would take us shy of $100 in terms of the rally. And the reason that my outlook is really starting to generate possibly a $100 move is that when I consider the basic rallies that we do see in this market, when we have genuine rallies, and these are the last two rallies that we've really gotten off of this price point, meaning 1180, we've had pretty substantial rallies indeed. And so these rallies have taken us really couple of $100 in each case. So my sense is the fact that we are right in this area right now, and I wouldn't look for this as a straight up rally, but it wouldn't surprise me to see this rally take us about $100 from the low, of course the low being roughly at 1180. So for specific price points, I draw your attention to this 720-minute chart that we're currently looking at, and I do believe that we found a first real level of resistance in the market. We talked about this a little bit yesterday, and this being the area of about, call it 1234, 1235, and there it's a 23% retracement on our Fibonacci scale, of course. Support right now, I still believe, is right at around 1221. These are, of course, short-term marks. We have sent out a recommendation yesterday. We had our stop roughly at, we entered at 1208. We had our stop initially at 95. From 95, we moved it just to our entry level, and now we have our stop at 1218, so it's just below this 21, which I believe is current support. In other words, my belief is if we see this market continue to rise, and of course that could end tomorrow, but if we see it continue to rise, I want to be able to attempt to capture the maximum that we can out of this move. Our position could be a little bit better, but we're still in at 12.08, and I'm comfortable. You can see these support levels right in here as this market comes down. This price point is supportive right before it hits this triple bottom, and then we get this tremendous spike and quick spike off of that particular price point. So traders, we're looking at the continuous COMEX contract of gold. Let's go ahead and shrink this just a little bit so you can see where this initially comes in at. And obviously, as you can see, I've got this long-standing compression triangle that we broke below, this being our upper level resistance, this being our lower level support. Of course, we came down, we hit a triple bottom right in this area. And so my sense is if this market does continue to rise, I really wouldn't be surprised to use this particular resistance line, this particular support line could in fact, and I believe probably will in fact, become some sort of initial resistance. Now realize I've got to put a huge conditional caveat on my last couple of statements. Realize that my belief in the possibility of seeing a $100 rally in this market is truly based on the historical perspective of looking at the last two times we have hit this mark at 1180. At the same time, it's highly conditional in that this market has been reacting very, very closely to both the equities markets and primarily the dollar. And you can see this terrific move in the dollar, the way it has just tremendously moved back up off these lows. And if we take a look at a fib retracement, let's go ahead and put that in. What we can see, and I've just added a fib retracement, I've started at roughly 79. We can adjust that just a little bit like that to the top. And the one thing that we see is 85 in terms of the dollar index is a 23% retracement. We're at 85.91 right now. We'll draw a line across. So the fact that we've gotten some sort of support in this area shows us that any kind of retracement that we have just seen in this market is extremely, extremely shallow. And that really bodes to the overall strength of this most recent rally. So you have this rally which takes the dollar index from 79.5, so to speak, up to almost 87, this being 87 right in here, and then only retraces a little bit over 23%. Tells you that if we do have this market bounce back up, we've got an incredibly strong dollar. And when you consider the scenario, the issues right now in Europe as well as in China, really the only game in town, I should say, really I believe is the dollar when we look at these currencies, and also the U.S. equities markets as opposed to the global equities markets, although at this point in time, they are absolutely all interrelated because most of these large companies are multinational companies operating globally. And so that if there's any kind of a slowdown, economic slowdown in Europe, these multinational companies are going to feel it because that's where they're selling their goods and services besides the United States. So what about silver? Well, we did see platinum and palladium trading higher today, and it's trading higher today as the equities markets attempts to form a base. Both platinum and palladium, along with silver, are industrial precious metals. They're used highly in industry. So the fact that we're seeing it in platinum and palladium bodes well for those two white precious metals, but I'm honestly not seeing it in silver. I continue to believe that silver is going to be an underperformer in relationship to the performance we're seeing in gold, platinum, and palladium. Maintain your current long position in gold. Maintain your current stop as we moved it up yesterday. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.